Hello and welcome back. The purpose of this tutorial is to give you an overview of the accounts facility found in Gnomon. So if we go to the accounts page, you can see debtors and creditors on the left. This page lets you see any rent charges and lets you receive rents manually by ticking the boxes on the left and going to the actions down the bottom, or using the take a payment function on the right. Additional actions can be taken down the bottom, for example the ability to send rent reminders, and other debtors can be seen at the top. There's also a rent upload facility where you're able to upload a bank statement to reconcile any rents received with the rents that are due in the system. Right, let's go to Properties by Landlord. Here's where you would pay landlord and send statements. Again, back on the accounts page, the chart of accounts can be found here. Now let's go to the transaction history. This section lets you see an audit trail of every transaction that's been posted in the system. Now if we click to expand all, we can see the composition of each transaction. Some key reports are profit and loss, the trial balance, and the transfer report. Now the transfer report is designed to give you a snapshot of your agency fees or any VAT or NRL tax that's accrued to transfer from your client bank to your business operating account. Let's go to journal entry. Now this facility lets you manually post transactions. For example, it may be a client's or a bank's opening balance or an accounts adjustment. Gnomon not only lets you manage your client's money, but you're also able to do your office's bookkeeping. Now the term client accounting is referred to where you would manage money on your client's behalf. For example, you may manage rent, deposit, work orders, and so on. Now if we take a look at the ARLA report, we can get a snapshot of what client's money we're holding. Now that brings us to office accounting. Office accounting is where you would manage the overheads of your office, so that's utility bills, staff wages, travel, advertising, etc. Clicking here to enter an expense, for example, is how you would log a cash receipt. That could be, for instance, a travel expense. The VAT return facility lets you make direct submissions to the HMRC. Right, let's take a quick look at the tenants, landlords and directory records accounts. So if we go to lettings, and then we'll click to see the tenants accounts. The tenant has three types of accounts. That's the main account, rent due, and the deposit account. The main account can be seen as the client's general ledger. The main account usually deals with transactions between the agency and the tenant and has nothing to do with the landlord. So generally rent should not be collected into the main account unless you're working around a particular scenario. Pretty much all accounts that you see have a debit and a credit column. So if you need to receive money from the tenants for repairs, for example, you would first need to apply a charge that will put the tenant's account into negative, and you will then receive a payment against that charge, which will then balance the tenant's account. Now the rent due account is where rent is charged and rent money is then received against those charges. Back on the tenant's overview page, the deposit account is broken into two sections. Deposit due shows the amount receivable, and deposit held is held either by the agency or by a deposit scheme. Let's explore the landlord's accounts. Now the landlord has two accounts, that's the main and the float account. If we drill down into the main account, there are a few observations. So the main account is similar to the tenant's accounts where you would apply charges and make deductions, but you would also notice that rents are also received in the landlord's main account. Now, most transactions are related to a tenancy, and this is how the system knows which transaction relates to which landlord statement. The float account is to put a sum of money aside to cover any repairs before the renters come in. Let's search for a directory contact and then go to their accounts. Now again, a directory contact has a main account that's similar to the landlord or tenant's accounts where you would manage any contractors or suppliers' invoices or bills. Aside from the client accounts which I've just mentioned, there are also some accounts which enable the system and your business to operate. So if we go to the chart of accounts, the 5 most commonly used accounts are bank, income, expense and asset accounts. Let's start with a bank type of account. This is a virtual bank account that should mirror your business's bank accounts. For example, in most cases, you should have a client account, business operating account, and a virtual deposit account if, for example, you send your money off to a deposit scheme. If we look at a bank account in the system, it should mirror the bank account in real life. So if you look at your bank statement, each transaction found in your statement should match the transactions that are found in the system. To help achieve this, you can use the bank reconciliation feature found in the account section. Income accounts are categories used to identify transactions related to your company's income, such as lettings or management fees. Now, this isn't to be confused with a bank type that I showed you earlier. Bank balances found in Nomen PMS should mirror the balances that are found in your bank account. However, balances for income accounts that you see here does not mean that you're holding that amount of cash. The balances will increase over time. So to see what income you've made, you're able to view reports such as profit and loss and equally drill down into each account to filter transactions by date. The best way of knowing what agency fees need to be transferred out of your client's bank account is to see the transfer report that I mentioned earlier found in the account section. Expense accounts are the opposite of income accounts. These are categories to identify transactions related to company expenses such as suppliers, contractors, travel, wages, office bills, etc. That brings us over to the 4th type of account, which is assets. These are collateral assets that you purchase for a company such as computer equipment or furniture. They won't appear in your profit and loss report, but you'll find them in your trial balance. To depreciate an asset, that's done via the journal entry. The income and expense accounts can also be seen via the profit and loss report.